Good morning. You're watching All You Need to Know on Bloomberg Quint Live, and I'm Alex Matthew. First, the headlines. India denies asking the US to act as mediator between Pakistan and India. The denial comes after Donald Trump claimed Prime Minister Modi had requested his intervention on the Kashmir issue. The joint auditors of Diwan Housing Finance, or DHFL, have raised significant doubt over the company continuing as a going concern. The company, meanwhile, has said that it received non-binding term sheets as part of a corporate restructuring program. The Lok Sabha on Monday passed amendments to the Right to Information Act. The opposition says that the amendments will turn the act into a toothless tiger. The government panel set up to regulate virtual currencies has suggested a ban on private cryptocurrencies, but mooted the introduction of a digital rupee in consultation with the Reserve Bank of India. And three major Nifty companies, HUL, Larsen & Toubro, along with Zee Entertainment, will be reporting their quarterly numbers later today. Let's start with the action on Wall Street. It was a choppy day of trade in the US. Equity benchmarks on Monday. But the indices managed to eke out gains led by technology shares. Investors are gearing up for an earnings-heavy week, with major companies like Coca-Cola and Alphabet scheduled to report their quarterly numbers later in the week. Renita Young of Bloomberg News brings you a wrap of Monday's Wall Street session in this report.
U.S. markets fluctuated during Monday's session but ended higher, with tech shares leading the gains ahead of a big corporate earnings week. The latest company to report corporate earnings was TD Ameritrade, coming in just after the bell and rising in post-market trading on better-than-expected earnings. Halliburton also posted better-than-expected earnings, rising throughout the session. And we know that Coca-Cola will come on Tuesday, along with other peers in different industries throughout the end of the week. Meanwhile, federal regulators may approve a Sprint T-Mobile merger. That sent those shares moving along as well. And Apple rallied after Morgan Stanley boosted its price target. Meanwhile, in commodities, we did see oil rising on conflict in the Middle East, and gold was also up just a tad bit during the session, and the U.S. dollar rose versus major currency competitors. And that's a look at your Wall Street action on Monday. In New York, I'm Renita Young for Bloomberg News.
Now, tensions continue to escalate in the Strait of Hormuz, with Iran defying the U.S., saying that it will be executing its nationals that are allegedly CIA-trained spies. It also said that they will not free the UK vessel that was seized by them unless an Iranian vessel that was seized in Gibraltar is freed. Aaron Clark of Bloomberg News brings you the implications of the latest measures there.
Sort of, escalating tensions in the Strait of Hormuz, this really crucial oil choke point. About 1/3 of the world's seaborne crude travels through the Strait of Hormuz. Like you said, the latest is on Friday. Iran's Revolutionary Guard seized the British oil tanker, the Sena Impero. It's still impounded there. Like you said, they've asked that the UK release an Iranian vessel that the UK has impounded because they said it was going to deliver oil to Syria. But generally, I think what we're seeing is just this escalating tensions between Iran and the UK and the US, and a sort of a tit for tat. Already in May and June, there were 6 tankers that were attacked. Iran denied responsibility for that. As well, Iran shot down a US drone that it said entered Iranian airspace. So I think what we're seeing is just rising tensions in this really crucial choke point for oil exports globally.
Crude at the moment down a little bit, but originally the move was higher, of course.
Yeah, yesterday we saw Brent rise the most in a week. It closed at around $63 a barrel yesterday. WTI, which is trading this morning, is right around $56 a barrel. I think we're beginning to see a little bit more geopolitical risk priced into oil. We've seen it rise a little bit the last couple of days. But overall, I think there's much more concern, and what's overshadowing that geopolitical risk still is just concerns of economic weakness. WTI fell about 7% 1.6% last week. That was the biggest weekly decline since May, and a lot of that was because U.S. gasoline and diesel inventories shot up much higher than analysts expected, which really shows just sort of fuel demand weakness and suggests that there might be larger economic weakness in North America. So I think that's continuing to overshadow this, although we are seeing a little bit prices rise a little bit more as the geopolitical tension gets priced in.
Okay, let's also take a look at the Asian markets now. Sophie Kamruddin is joining us live from the Bloomberg studios in Hong Kong. Good morning, Sophie. What are the trends that you're seeing this morning?
Well, Asian stocks are modestly higher on low volumes, with tech providing the biggest boost across the region. Japanese shares adding 0.8% on the Nikkei 225. And we do have chip equipment players, the likes of Tokyo Electron, gaining ground. This on the back of Morgan Stanley having a more optimistic view on this sector. Now, this as we're seeing the yen back above 108 against the dollar. And checking in on the Kospi, up a third of 1%, with the likes of Samsung the biggest boost. This as we weigh earnings against concerns around Japanese export curbs. I want to highlight some of the earnings reports that we got so far. We had the Kia Motors reporting second quarter results, indicating sluggish sales growth for that period. That stock losing nearly 2% this morning. And Hyundai Motor also extending losses as concerns over a potential labor union strike that is offsetting the better than expected earnings report that we got from the car maker on Monday. Now, over in Sydney, the ASX 200 gaining a third of 1%, while we're seeing pressure on the Aussie dollar and the Kiwi dollar in the wake of some commentary from the central banks in Australia as well as in New Zealand. ANZ Bank saying that the RBNZ's potential refresh of its monetary policy around unconventional measures that could take the heat out of the Kiwi dollar, which is off a third of 1%. Now, turning attention to the mainland in Shanghai, we're seeing a little change for that benchmark. And here in Hong Kong, the Hang Seng under pressure so far this morning, off by 0.1%. Among the laggards of note, we have Macau casino operators Sand China and Galaxy Entertainment on the back foot. This as the focus is on that industry. We do anticipate some better results from that sector when they report this week, as the mass market segment is seen boosting profits for the quarter of note. Now, I also want to highlight one area in particular, that is the Star Market, the newly launched board in Shanghai that focuses on startups in the tech space in China. We saw a huge rally across that space, all 25 stocks gaining ground. We saw one stock rising more than 500%, but today there's a bit of a different tune. 24 or 25 of those stocks are under pressure, slumping today, giving back some of those gains as the earnings picture looks to be priced in. Back to you.
Thanks so much for that, Sophie. Let's talk a little bit more about oil. Bank of America Merrill Lynch's Francisco Blanch believes that if the supply side conditions for the oil market are bad, the demand conditions are no better. Listen in to what he told Bloomberg Television in an interview earlier today.
Well, look, I mean, we have a pretty poor supply situation right now in the market, but demand conditions are equally as bad. Inventories have been roughly stable, so prices have held up in that $60 to $65 range for Brent, and that's where we think they're going to be for the next few months, unless either something dramatic happens on trade or Iran tensions escalate to a point where we actually get a large number of vessels disrupted. And again, that's not 1, 2, or 3. It's more in the range of 50 to 100 vessels, maybe 150 vessels. I think that would be enough to get the market moving very meaningfully higher. But that, of course, would be kind of in line with a broader conflict in Hormuz. But for the time being, a ship here, a ship there doesn't necessarily move the market beyond the range it's been for a while.
I understand what you're saying in that it doesn't change the circumstances, but the headlines and the sentiment that it results in would perhaps be a drag on the energy markets. Why isn't that having more of a sentiment impact?
Well, so we've seen a bit of a recovery in spec positions as of last Friday, looking at the CFTC reports. But in reality, one thing we've observed is that shale oil supply in the U.S. has been growing dramatically for years. And if you ask me the same question 4 or 5 years ago and you say, hey, Francisco, what happens if we lose all of Iranian supplies and the Strait of Hormuz is at risk? I would have put a very high price on that. The reality of the matter is shale oil production performance has been so astonishing for years that the market has become a lot more perhaps accommodative and a lot more relaxed about these tensions in the Middle East. Now, this is not to say that if the situation does flare up and we lose the 20 million barrels a day or so that are produced in the region, oil prices will not spike. They will spike, and they'll spike a lot. But the question is, first of all, will that happen? And secondly, if it does happen, for how long will it happen? Because we have about 2+ billion barrels of emergency reserves across the OECD to deal with this issue. So again, that's why we have to look at it in steps and remember that all of this is maybe a posturing game across the various parties involved here, trying to get Iran to negotiate with the U.S. ultimately, right?
All right, let's turn to the Indian markets now, and lots to talk about. Agam Vakil is here to tell you about the day's trade and also what's happening in the futures and options space. Agam, one of our viewers this morning, Tarb Gulati, has got the question of our lifetimes. Is there going to be more downturn as corporate earnings season is not doing particularly well?
Right.
But I mean, you can ask that question every day.
So Alex, technical analysts will tell you that the trend has certainly changed towards the downside. But we also know that there's been a lot of weakness of late. So you never know, there could very well be a bounce off and, you know, a chance of some short covering. We just can't time that, and that perhaps is going to remain. That's the reason why it's going to remain a question that will keep coming in. For now, however, as far as the opening is concerned, it's very flattish. And well, we're likely to see some consolidation considering such sharp down move. And since we did see about a 0.6% cut for the Nifty, mid-cap and the small-cap indices coming off too, the banking indices were, of course, in focus because of the sharp drop that we saw in the Nifty banking index, particularly driven by the private sector space. That explains that the PSU banking index didn't decline by as much as the private sector banks. But to talk about what we've seen in ADRs, again, mixed cues. Vedanta, of course, is up 3.8%, but if you leave that aside, we haven't seen too much movement. And of course, HDFC Bank declining by around 5%. This, of course, is the earnings reaction that we've already seen play out in the Indian markets yesterday. But moving on, we also have fund flows, and this time fund flows have been twice as much as what we saw yesterday in terms of outflows for FIIs on a net basis, selling out nearly 2,000 crores, 1,917 odd crores to be precise. DIIs buying stock worth 1,830 odd crores. So that outflow from the FII table continues, and this is not only on account of weak earnings, but largely on account of the entire environment and taxation. Of course, we all know, and we have been addressing off late. And while we did see that 73-point cutoff, a majority of that was contributed by the HDFC Twins along with Kotak Mahindra Bank. Reliance Industries, even though it advanced and gave that impetus of 26 points, it was too little for the indices. But let's move on and talk about the futures and options space. Of course, it's expiry week, so we are going to be watching out for a lot of unwinding coming through in the Nifty futures, the Nifty banking futures, also seeing unwinding up to the tune of 17%. Let's move on and talk about your other variables. For now, we're keeping an eye on that 300-point range, which has now cemented between 11,300 and 11,600. Many may argue, well, we are nearly at 11,300. There's a possibility we could go down, but never forget, because of the fact that there is so much accumulation and puts in the 11,300 call, and assuming that is all writing, well, it's for now looking unlikely, but you never know. Moving on to your open interest change, and as I was mentioning, we've actually seen a little more writing around the 11,400 call, which is surprising, which we should see how that thing, how that pans out today. Now, the VIX, of course, has advanced by around 4% at around 13. Again, well, relatively comfortable levels, but you never know. But this is where we are looking at a little bit of overselling, because the put call ratio, the Nifty put call ratio is an absolutely neutral level of 1. Moving on to your stocks, we have Dish TV, which enters the F&O ban. And of course, in other stocks that we are watching out for, we have Reliance Capital moving out of the F&O ban. And in other stocks, Okay, so Coal India, of course, we'll just have one because it's unwinding. In terms of unwinding, let's take a look. Century Textiles, Grasim Industries, and Adani Enterprises. So a lot of names out there to watch out for. And of course, Alex, it's expiry week, so you never know which way the markets are going to turn. But for now, it just seems that there just is a little bit of support in the 11,300, which is absolutely critical. And if that gets taken out, then there's going to be a little more pandemonium.
All right, thanks so much for that, Agam. Those are the levels that you have to watch out for. 11,300, as Agam points out, is critical. Let's look at what's making headlines across the globe. Selena Wang of Bloomberg News brings you the first word headlines.
President Trump has praised China, saying Xi Jinping has, quote, acted responsibly over the ongoing mass protests in Hong Kong. He added that Beijing could stop the demonstrations if they wanted, but hoped that his counterpart would do the right thing. The latest protests on Sunday saw activists spraying graffiti on China's official liaison office in Hong Kong.
I know that's a very important situation for President Xi, and you know, you could say what you said, but you could also say that he has allowed that to go on for a long time, and you know, it's been relatively, I think it's been relatively nonviolent.
President Trump says Congress has reached a deal on suspending the debt limit and raising government spending for 2 years. We're told the agreement would offset the $75 billion of higher expenditure that would give the administration and the Republicans about half the savings they're seeking. The new spending will limited savings will likely push the budget deficit over $1 trillion next year. It may soon take a lot more than making money to secure a big bonus for bankers in Australia. Financial gains may be limited to 50% of performance criteria for bonuses under new regulatory proposals that pressure banks to focus on better employee culture and governance. It comes after an inquiry concluded pay and incentive structures were the root cause of misconduct in Australia's finance industry. Global news 24 hours a day, on air and at TikTok, on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Selena Wang. This is Bloomberg.
On to earnings now, and Kotak Mahindra Bank reported first quarter numbers after market hours yesterday, and they were largely in line with analyst estimates. Provisions, however, nearly doubled compared to the previous quarter. The management has highlighted stress in the CV space as well. Shefali Malik takes us through the quarter gone by.
For Kotak Mahindra Bank, the net interest income figure on a standalone basis came in line with the expectations. Profit, however, was below expectations, growing by about 33%. We were expecting a growth of about 40% on a low base of last year. And NPAs remained stable for them, with gross NPAs coming in at about 2.19%, net NPAs 0.73%. And more importantly, there were no negative surprises that came in from Kotak Mahindra Bank, unlike what we've seen for most of the other banks which have reported numbers so far. So slippages for them came in at about 750 crore rupees versus 900 crores on a sequential basis, and to this slippage figure of about 750 crores, MSME segment contributed about 100 crores. Margins remained largely stable. Loan growth came in at about 18%, and the commercial vehicle segment that grew by about 24% in terms of lending on a YOY basis, however almost muted on a sequential basis. Small business, personal loan, credit cards grew by about 29% on a YOY basis and about 1.7% on a sequential basis. So some banks have highlighted concerns in this segment. So for them as well, it was almost a muted growth on a sequential basis. So that's on a standalone level. On a consolidated level, the profit grew by about 23%, to which the bank contributed about 1360 crore rupees of profit, and the subsidiaries and the associates contributed about 30% of the consolidated PAT of about 1932 crores. And management, after the press conference, said that the auto sector is a concern at this point in time, and the excitement needs to come back in the tier 2 and tier 3 cities when it comes to buying vehicles. And also going forward, the growth will mainly come from the consumer lending segment.
Zee Entertainment, meanwhile, may report a near 20% growth in its net profit for the quarter gone by, while margins are likely to remain unchanged owing to higher content costs. However, investors will remain focused on whether any details emerged about the impending stake sale. Mishika Parak is here to take us through all the expectations from the entertainment major. Mishika, morning.
Good morning, Alex. Like you pointed out, lots of key numbers that we need to first look at. Their revenues are expected to grow by 9.4% at 1,940 crores versus 1,772 crores. Net profit should go up by about 19% at 388 crores versus 326 crores. And EBITDA can be expected to be higher by 12.5% at 611 crores versus 543 crores. Margins, although, are expected to remain flat at 31%. Now, the advertising revenue growth is expected to be modest, mainly weighed down by the impacted reach due to the transition into the new tariff order. Also, cautious spending by advertisers, particularly FMCG. Now, advertising growth can be expected to recover in the second half of FY20 once the business stabilizes. Viewership share of Zee can be affected due to its absence in the sports genre and pull from the free-to-air segment. Now, subscription revenue growth, on the other hand, is likely to jump due to the uptake of Zee channels in regional markets. Also, increase in ARPU in the new tariff regime shall lead to an increase in realizations as well. We can expect EBITDA margins to decline due to higher content costs and digital investments, and stake sale continues to be a key monitorable. We have with us now Darshan Mehta, who will take us through what's happening with Larsen & Toubro.
Yeah, so 10% top line growth is something that we are anticipating. On the bottom line, a 30% growth and close to a 20% growth on the EBITDA front. So EBITDA margin, slight bit of expansion is something that we can see. The other key monitorable will be the order inflow that the company has said. Now they haven't given exact, they don't start giving exact numbers. Now they give in a bucket in terms of the lower end and the higher end. So the lower end at this point of time looks at close to 22,500 crores and the higher end is 39,500 crores. So if you take an average, they will come to orders worth almost 30,000 crores is something that we can anticipate. Now the order inflow was slow given the fact that the elections were there, so the order slowdown was clearly seen. That a large chunk of their election orders come in from election was stopped. Large chunk of the orders come in from the government. When because of election, there would be a slowdown. The base was high last time around. They got 36,000 crores of orders last time. So on a high base, the orders probably this time around may be seen much lower this time. And the margin will be increasing on the back of a better product mix that they have. The number of services that they have offered, that is something that will aid margins for the company. Key monitorable will be the working capital and order inflow. They have given an order inflow guidance of revenue growth at 12 to 15%, order inflow growth at 10 to 12%, and margins ex services at 10.5%. Remember, they met that number last time around after almost 5-7 years of missing that number or cutting it down. But it'll be important to see what the management says post the conference call to decide whether they will be sticking to this margin or no. But Agam here joins us with the numbers from HUL.
Sure, Darshan. So as we saw in the case of Dabur, it was a steady quarter, and this time HUL as well may not be any different, even though volumes growth this time is expected to be sequentially lower than what we saw in the fourth quarter of the previous financial year. So starting off with revenues, we are seeing and expecting a 7% rise at around 10,171 crores. EBITDA margins expected to expand to around 24.3 crores, and net profits likely to rise 12% to around 1,716 crores. In terms of the volumes number, the all-important number, we're expecting a 6% rise, and this is largely unanimous across several brokerages. And we are expecting about 11 to 12% growth in home care and about 7% growth in personal care. We also expect gross margins to expand marginally, and of course, it will essentially be cost-saving initiatives that will actually drive margins growth going forward. Let's not forget, analysts have not built in the impact of Ind AS. That is something which we'll have to take cognizance of, and we will be keeping an eye on the commentary from rural and urban demand. But on the whole, we're expecting a steady quarter from Hindustan Unilever.
Thanks, Agam, for that update, and indeed also to Darshan for the update on the earnings there. Let's talk about the big corporate news now. The auditors of Diwan Housing Finance have listed several qualifications and disclaimers to the company's annual financial statement. Remember, the results first released on the 13th of July were unaudited. In addition, the auditors have thrown significant doubt on DHFL's ability to continue as a going concern. Vishwanath Nar is joining us on the phone line with all the red flags that have been raised. Vishy, what are we talking about here?
Right, Alex, Good morning. So the points that the DHFL auditor had mentioned, those include, firstly, on the going concern status of the company itself. Now, according to the auditors, the going concern status is not dependent on a lot of things, including selling the assets of the company, restructuring the accounts of the company. According to the auditors, some of these things are not in the hands of the company itself, and therefore that could become a struggle for the going concern status. Including that, of course, some of the other issues that the auditors had pointed out include the intercorporate deposits of the company. Now, these are essentially unsecured intercorporate deposits. According to the auditors, the recoverability of these deposits could come into question, as well as some of the loans that were on the company's books. These are assets that the company has given out to certain corporates. So those are also under question because of some of the documentation errors that the company had pointed out even earlier. So according to the auditors, these issues put together, as well as the going concern status issue of the company, all of this put together could cause future problems. Now, the company itself has been maintaining that it has paid about 41,000 crore of its dues, and those dues could, point to a fact that the company is capable of repaying all its dues and come back into business. In fact, in the last time when the company put out its unaudited results, it had said that it will be able to come back to business at some point in August, start lending again and become and normalize operations. However, those questions still remain after these auditors' notes. So we need to see whether the company is capable of reaching that restructuring deal at all, find an investor who will put in equity in the company so that the company can run, as well as whether the current book of the company is of very high quality or not. So all of these questions still remain unanswered, and those will get clearer as the company presents its resolution plan to the lenders later this month.
Vishy, one of those points that you were speaking about, the finding of an investor, that is going to be a key leg in this. Apparently, there's one that has shown interest.
Yes. So what we understand from our sources is that Aeon Capital, which is a private equity investor, they have already had conversations with the State Bank of India, which is the lead lender in this entire restructuring process for DHFL. So they have been having that conversation with the bank, but still there is no final binding offer. In fact, even in the audited results that the company put out, it said that it has received several non-binding term sheets from investors. There is no clarity on whether these investors are actually going to, put in that money. But yes, discussions are definitely on, and how they again become clearer and will depend a lot on what the restructuring plan is approved by the lender.
All right, thanks so much for that update, Vishwanath. Let's turn now to Mishika Parak, who's back to tell you all about the stocks in news. Mishika, what's on your list today?
Good morning, Alex. I'm back with a long list of stocks. The first results that we're looking at is TVS Motors. Their results were in line with expectations with higher margins. PAT was mainly impacted by depreciation, which went up by 28%, and finance costs that has gone up by 62%. TVS has cut the FY20 industry outlook from 6 to 8% year-on-year growth to a year-on-year decline now. CLSA says that the margins are unlikely to improve amid cost pressures and weak demand. Bank of America says margins remain a concern given weak volume outlook and cuts target price to 325 from 390. Credit Suisse upgrades stock to neutral as it seems a limited downside, while MK downgrades it to sell. Then we have United Spirits. The results beat estimates, but gross margins remain muted. Reported numbers were boosted on account of a one-time sale of bulk scotch during the quarter, and the margin beat is on account of lower employees and advertising costs. Then we have Just Dial. The results were above estimates on all fronts. Revenue growth was led by gains in paid campaigns on lower realizations. Now let's have a look at the stocks that we need to watch out for. We have Divan Housing Finance. NSE has suspended trading in DHFL's 8 non-convertible debentures with effect from 31st July due to redemption. Now, Bombay Stock Exchange has signed an MOU with Shanghai Stock Exchange to facilitate maintenance of orderly securities markets in both India and China.
Thanks so much for that, Mishika. Now, the Lok Sabha yesterday passed the RTI Amendments Bill amidst protests from the opposition, who said that it will not only dilute the transparency in the law, but will also render the resolution into a toothless tiger. Take a look.
A historical law was brought by then UPA government, who was led by Honorable Sonia Ji.
All this will now go through this amendment. The government can hire and fire the information commissioners as they like, pay them what they choose, and this will inevitably vitiate the independence of the information commissioners. This amendment is therefore, if anything, part of a pattern of a sustained effort by this government to render the RTI, like the Human Rights Commission, a toothless tiger.
The ruling party, the BJP, has 303 MPs in this House. 303 has many connotations. IPC 303, many lawyers know here it refers to the death sentence. I do hope the government will not use their 303 to give a death sentence to the spirit of RTI. What about the salary? It will be prescribed in central government. Take every power in your hand. I charge. What does it mean? I charge. The Information Commission is going to be your housemaid.
इस संशोधन के माध्यम से we would rather be able to streamline and institutionalize the functioning of the information commissions.
मैं समझता हूँ देश में चाहे कॉमनवेल्थ का स्कैंडल हुआ हो, चाहे 2G का हुआ हो, ये सारे जो हुए हैं ये स्कैम्स, ये राइट टू इंफॉर्मेशन के माध्यम से ही देश को उजागर हुआ है। इस देश में पिछले 5 साल में हमारी सरकार में कोई स्कैम हुआ हो, कोई स्कैंडल हुआ हो, क्या पूरे देश में इस इंफॉर्मेशन एक्ट के रहने के अधिकार के बाद भी शायद एक भी नहीं हुआ है। ये अपने आप में इस सरकार की निश्चित तौर से पारदर्शिता है। और यही एक्ट था जब हमारी सरकार नहीं थी, RTI के लोगों ने।
Let's turn to other news now. A massive fire broke out in the Mahanagar Telephone Nigam building in Mumbai yesterday. After nearly 6 hours of rescue operations, fire personnel managed to rescue all the 84 people stranded on the terrace of the building. Take a look. Lots of stories you'll find on the website bloombergquint.com. I'm going to tell you about a couple of them. President Donald Trump has offered to help resolve India and Pakistan's long-running conflict over the territory of Kashmir, citing an invitation from Prime Minister Narendra Modi that the government later denied. Spokesman for India's Ministry of External Affairs, Ravish Kumar, said on Twitter that no such request had been made by India's Prime Minister. The government panel, constituted to come up with recommendations for regulations on virtual currencies, has suggested a ban on private cryptocurrencies, but has said that an official digital rupee in consultation with the Reserve Bank of India could be considered. That's all you need to know going into trade today. Do stay tuned. There's a lot more coming up in just a short while. This is Bloomberg Quint.